So with that being said, I am going to give you my picks. So here they are. Hello guys, and welcome back to the channel for today's update on July 31st, 2020. If you are new to the channel, make sure you stick around all the way to the end where I drop a fact on you for this day in history. Today's video, we're going to be covering 4 popular trading platforms which investors use to day trade or hold retirement accounts in or what have you. And each of these kind of have pros and cons. So we're going to go through each of these and kind of break those down. And at the end of the video, I'm going to give you my recommendation for which one I would ultimately choose. So as a disclaimer before we get started, one of the ones we are going to cover, which is ETrade, I personally use. So if you see any implicit bias in ETrade, that may be why. It's just a platform that I've been comfortable with, I'm using, and I've used for a long time. So typically it's not good to shell and move your money around each of these different platforms, so I've just stuck with ETrade. Other 3 which we're going to cover in addition to ETrade are Robinhood, Charles Schwab, and Fidelity, and I'll kind of go into why I picked each of these. And we're going to look at some different categories to help us determine kind of which one is the best for your particular needs. One thing that we do look at is commissions. Do each of these take commissions on stocks and ETFs that you trade? Because those are going to probably be the most common things that you would actively be moving your money in and out of. And each of these, they do not have commissions, which is awesome. So we're going to take that off the table as kind of one of the things that we're using to compare. The other things we're going to look at are, do they have a stock by the slice option, which is if you want to own a portion of a company like Amazon and you don't have $3,000 for a share, can you take $500, let's say, and get a portion of Amazon? So that's the one thing that we're going to be looking at is stock by the slice. Another we're going to be looking at, do they offer any bonuses or incentives for signing up? Because free money is awesome. That is free shares. It's whatever you want to do with it. Free is good. And lastly, we're going to be looking at what kind of analysis or trends can you use to harness to better your decision making in what stocks you buy. So first up is Robinhood, and I think Robinhood has not been around as long as these others, but it has exploded in popularity, especially with millennials like myself, just because of how easy it is to sign up. And ultimately everything's on your phone now, right? So as long as the app is intuitive and you can navigate with ease and trade with ease, it's going to be a hot option. But specifically going through the different criteria, right, that we have, stock by the slice, bonus for signing up, and then the analysis that is offered. So Robinhood does offer a stock by the slice option starting at $1, right? So that's awesome. Stock by the slice starts at $1, which means if you want to own some of Amazon, $3,000 shares, and you have $1, you can get a percentage of Amazon. Now, the only thing to note is you can't take a percentage out. So let's say you wanted to own Berkshire Hathaway or a company that's thousands of dollars per share. You can't put $1 in because your stake in the company can't be less than a value of like 1 cent. So that is something to note. So you're probably going to have to put more than a couple dollars in if you want to own a share that's thousands of dollars. That is one thing to note. Next, bonus for signing up. Robinhood does offer you a free share for signing up, but please do not be fooled. This is like gambling, or kind of like pay to play almost, is the biggest thing that I compare it to. Yes, you have a 1 in 500 chance of getting a Microsoft share, or 1 in 500 of getting Johnson & Johnson. So that's like, anywhere from $100 to, let's say, $300 like give back. But more than likely, you are going to get a share of, let's say, Ford, which is currently at $6 to $7. So just something to think about. Lastly, analysis. Feedback from friends and just everything that I'm reading online. Robinhood tools are not super intuitive. They basically rely on you to essentially know what kind of stocks you want to buy and sell before you trade, and the analysis that they offer does have to be paid for. So Yes, there's a lot of other tools out there like Yahoo Finance or M1 Finance where you can get these great insights and analytics. So maybe that's not something that you care about. So that wraps it up for Robinhood. Next, we are going to look at ETrade. And ETrade does not offer a stock by the slice option, which is unfortunate because that is something that I wish I had access to. But they do offer, rather than a, let's say, gamble on Microsoft or Apple or Johnson & Johnson share for signing up, they do give you a just straight up cash into your account for deposits or transfers. So that's another big thing to note, a transfer of any existing retirement account for these different values that you see here on screen. So let's say I have $5,000 sitting in the bank that I'm willing to just part with or put into an account. And you don't necessarily have to invest it. You can just put it in the account and it'll draw interest just like any other bank account, even if you're not invested in stocks, and you're gonna get $25 free. So if you have a lot of extra money in your bank account, I would recommend just putting it in ETrade and just letting it sit even in a cash account, and you're gonna get free money in return. Now, so that's just straight up deposit. Transfer, if you have a 401k account and you've recently changed employers, I would challenge you to transfer that account to a retirement account with ETrade. So if you take that 401k account, roll it over into a Roth or anything like that, and let's say you have $25,000, you're gonna get free $200. And that essentially, right, that's your guaranteed share of Microsoft. So you're not having to roll the dice with maybe getting forward if you do that with Robinhood. So that is one thing to think about with ETrade, and that's the bonus for signing up. And then lastly, ETrade does have a lot of really great intuitive tools that are free included with your account. And essentially, they give you credit ratings, Credit Suisse access. They give you great trend analysis, and the trading platform in general, I think is pretty great. I'm gonna put on screen a snapshot of my account, blurt out all the values. Maybe one day I will share those values with you guys. It's pretty intuitive, and I really enjoy the app. So that is ETrade. Now, next is Charles Schwab. And Charles Schwab and Fidelity, why I put on here. I don't know a lot of people who use them because I think these two companies are traditionally thought of as more retirement account-esque, where you essentially have a financial planner and they kind of manage your money through Charles Schwab or Fidelity. But they have been hot kind of on the ads lately for these stock slices. Now, Charles Schwab, they do have stock slices, but they start at $5. So as compared to Robinhood, where you could get in on a stock for as little as $1, Charles Schwab, you have to be in at least $5 to own a share of that company. And you can only do them in the S&P 500. So that's the other kicker, which pretty much every stock that you want to buy is in the S&P 500. Although like Tesla, for example, right? Not yet in the S&P 500. So that would be one thing to know. If you want to own shares of Tesla, these stock slices through Charles Schwab, not going to work for you until Tesla's put in the S&P 500. There is no bonus for signing up. Okay, so that is one thing to note. And the analysis and any insights, that is included in Charles Schwab. And from what I have seen online, it is pretty intuitive, similar to ETrade. Last one we have to talk about is Fidelity. And again, kind of like Charles Schwab, Fidelity is kind of thought more of as just a financial analyst, retirement account. You kind of put your money in, just let it sit, and somebody else manages your money. But they have changed. There's no commissions like all the others. They do offer stocks by the slice for $1, so the same as Robinhood. You can get in for $1 on your favorite companies, and I believe they offer more than just the S&P 500. So I think you can get in on anything that is listed on the New York Stock Exchange, NAZDAQ, anything like that. Any of those companies are fair game. So if you were looking to do, let's say Tesla, you could get in on that for a $1 stock slice with Fidelity. There is no bonus for signing up, and the insights tool likewise are provided where you get, credit ratings, any sort of financial analysis, and great insightful tools to help you learn more about something like options or anything like that. So with that being said, I am going to give you my picks. So here they are. If you absolutely don't care about analytics or tools or anything like that, and you're pretty much dead set and you know exactly what you want to invest in, I would personally go with Robinhood because if you're moving lower amounts of money, you're not willing to deposit $5,000, you do get a free chance at a stock. So why not? That is free. That is a positive. And if you're just looking to day trade or throw money around or a company that's hot, I think Robinhood is the way to go. Now, if you are looking more for kind of long-term retirement accounts, moving larger sums of money, still getting zero commissions, getting great insights and analysis, and you're not so much worried about either like stock slices or anything like that, I would go with ETrade. It is, I think, kind of been around the longest, and it's the most user-friendly from like a day trading perspective, I think, and great insights and analysis. They're constantly doing things with their customers to help improve the customer experience, and I think customer service is fantastic. I've rolled over several accounts and it has been awesome. Now, with that being said, I don't think there's much difference between ETrade and Fidelity. So if the $1 stock slices are something that you want, you still want that great analysis, I would point more towards Fidelity because that's not something that ETrade offers. And if they offer that in the future, I think that that's something that I'll totally get involved in on the ETrade side. So guys, you are free to do whatever you want to do, but I would encourage you opening up something and getting active on the trading block, because if your money's just sitting in your bank account, it's not doing anything. The interest that it's making is pointless. I would challenge you to put it in some dividend stocks, get some stock slices in companies like Apple, Amazon that you know are tanks, and you have no worry about of what they're going to do in the future. So before we go, today in history, July 31st, 1790, the U.S. Patent Office is opened. I think this is pretty cool because America has always been an entrepreneurial country. It rewards capitalism and hard work. And, you know, if you create something, you want to make sure that it's patented and nobody can come along and steal it. Take the iPhone, for example. Where would Apple be without the iPhone, right? Probably nowhere. So that's an awesome fact. Guys, thank you so much for sticking around for the whole video. Please drop a like, drop a sub, and I will see you tomorrow.